Back to our coverage of the coronavirus for you at 5:30. The New York Stock Exchange plunged 7% on Wall Street this morning, triggering a trading halt that lasted 15 minutes. But that's not all today. Oil markets plunged overnight after a deal between Saudi Arabia and Russia to cut production fell through, leading to a price war. The global demand for oil has slowed down because of the spread of the disease. The past 2 weeks have brought some of Wall Street's biggest losses in recent history as investors worry about the impact of the virus really on the global economy. Joining us right now is Heath Grossman from Johnson Brunetti. Heath, thank you very much for being here this afternoon.
Thank you.
You know, I think we said earlier this is the worst day since 2008 for the Dow. When people hear that, I think it can sound some alarms. What should people do?
Well, obviously, yes, that's going to bring up a lot of memories from 2008. We remember 2008 was not a fun time. Very, very fear-inducing and panic-inducing. The main thing, do not panic right now, right? I remember hearing stories of people back in 2008 that stopped contributing to their 401k because the market was going down. You don't want to be doing that. And if you're somebody that is retired or maybe leading up to retirement in the next 5 or 10 years, you know, this really brings to light the importance of having a plan, right? So for the folks out there that have done a financial plan, they're probably not feeling as much fear or anxiety right now because they have that plan, they've put that plan into place. But for the folks out there that maybe have not done a financial plan, another good reminder of how critically important that is.
It's interesting. I was telling you, some of my neighbors had said, you know, look, they're retired right now. A lot of people at home are retired. You know, they're depending on, you know, what they have in reserves right now. And it's almost like just hang in there, and now is not a time to do anything crazy.
Exactly. You don't want to let emotions take over. You know, a lot of people talk about timing the market and maybe getting in and getting out on heights and dips and things like that. Remember, it's not about being right once, it's about being right twice, right? I've heard about people getting out at a certain point and then they almost get paralyzed by fear in terms of when to get back in. Take that away, right? Don't feel like you have to be reactive to things like this. Have more of a plan, and it takes that reactive element away from things.
It seemed like a few weeks ago we were approaching 30,000 for the Dow, and now obviously we've lost a big chunk of that.
Absolutely.
I mean, these things tend to fix themselves over time, right?
Absolutely. I mean, this is actually, it's a very interesting birthday to some degree, because March 9th is a very important date. It was March 9th of 2009, which was the absolute down point of the market at that point. So this is actually the 11-year birthday. Today is the actual 11-year birthday to some degree, and not so great of a birthday party.
I was going to say that's an unfortunate coincidence.
Unfortunately, yes.
Okay, Heath Grossman from Johnson Brunetti, thank you very much for being here with us right now. Of course, we have more information on the WFSB app and WFSB.com.